MiningWeb Weekly with Peter Major of Modern Corporate Solutions. And this week we're going to be looking at that potentially new template from Eskom for the in the way that industry works with the major electricity supplier in South Africa. Could be good news, or I expect Peter to have, well, some pressing questions. Good to be chatting again on your MiningWeb Weekly show, Peter. I must tell you, on the podcast, we're getting like 97% listen-throughs, which is quite incredible. So it means the people who are listening, your fans, they don't just pop in and listen for a couple of minutes. They want to hear the whole thing. And today, we've got quite a story for them. So let me just paint a little bit of background for those who haven't been following it. We have got smelters in South Africa. They depend a huge amount on electricity. The electricity price increases have made them uncompetitive. 2 years ago, Eskom negotiated a deal with them to cut electricity prices for them by 40%. But that still hasn't worked, and they were about to close down, well, at least the Boshoek and Vonnegut smelters. But earlier this week, there was negotiations with Eskom where they've given it a stay of execution for 3 months in the hope, says the head of distribution at Eskom, Agnes Malambo, who I spoke with yesterday, that all the parties can come together and they can make a deal. Now, is she being excessively optimistic, or is there hope?
I think she's reasonably optimistic. There's definitely hope. What the worry is, Alec, is what about the other industries? And that's what's going to happen. They're going to say, wow, you rushed to help the ferrochrome industry. That's great. But what about us? We're the people that extrude aluminum and we make it into usable products. Or, hey, we're the people that are refining copper up here at Palabora. Why are we paying these high rates? And let's not forget the poor steel industry, huh? I don't think anything drove our steel industry down more than government policies. Unfortunately, the people that took over this government, they didn't have the experience, the gravitas, the knowledge of, it's like putting somebody new behind the seat of a 747. And no matter how many million miles you've got flying and watching the pilot do it, when they put you in the seat. So what we can't afford to do is knee-jerk policy here. And that's what happens. It's like a day trader. You go short, you go long. Oh, shoot, I'll write that one off. Oh, let's try again. You got to have a firm established policy. And what our firm established policy was here, we wanted to have the most usable, reliable, on-demand, cheapest electricity that the whole world did, because that would give all of our beneficiation a big edge. So it is good news that government's rushing now to save what smelters can still be saved, but they're almost stealing from Peter to help out Paul here, because now how are they going to make up the difference in rates? Is it going to be through consumers, or is it going to be through other industry? We have to do like China. China has brought down the real cost of electricity year after year. They used coal almost predominantly, and now they're making uranium, nuclear power, a big, big part of it. And they're using windmills and solar where it's economically viable, where it is cheaper than the others. But their main aim in China is, we want to have the lowest cost electricity to buttress our lowest cost beneficiation. And that's got to be the stated goal of government here, is we want to see decreases in electricity prices, not increases. Then we know government/Eskom is doing their job.
It is justifiable that one would be skeptical, as you clearly are, because this has been a litany of errors. But at least the penny seems to have dropped. Ms. Malambo's only been in the job since August. She said it's not only her. She said she's really just the public face of it. But there is a new deal for industry. And I said exactly what the obvious question, but what about cement? What about mining? What about steel? And she said, no, we'll talk to them. We're going to talk to them because we now have government behind us. It's almost like government, there's a light gone on there. Hey, chaps, we can't carry on the old way that we were doing things, neglect. We now need to focus on what actually creates jobs in South Africa and what delivers foreign exchange for us. So maybe the penny's dropped.
Yeah. Now we got to drop a couple pounds on top of the penny, right?
Oh, no, Peter. But let's just look at this. Can we compete, though? Because if you go back to the smelters, they got a 40% cut. Now they're going to need more than that to be able to keep them open indefinitely. And, of course, other industries will be in the same boat.
Yeah. I think they can compete. Electricity, they claimed, was 60% of their costs. So if you get a 40% discount on 60% of your costs, hey, that's minus 24%. That's a pretty big chunk. Now, is it sustainable? And I repeat, when you're competing against the world, you've got to benchmark yourself against the world. And that means we can't keep having 11% electricity cost increases. We got to go for below inflation cost increases. And then we got to really shoot for the moon and start going for decreases.
Okay. Is it possible? Could it happen?
Boy, it would be a determined, focused government in alliance with a determined, focused industry.
Peter, if we move away from that for a period of time, the stay of execution is 3 months. If we get to 3 months' time, and Ms. Mlambo did say that they're working through Christmas, they're going to be not taking a December break. Is this enough time to bring all the parties together and actually to make something that really works?
Yeah, I think it is enough time.
And what would you like to see coming out of it?
Well, something sustainable, something that makes sense, that can survive scrutiny, that we don't say, oh yeah, this works, but you got a couple log poles holding it up. And if someone knocks one of the log poles out, the whole thing falls down. We want to say, wow, this is a flat concrete poured foundation. Wow, there's rebar. Wow, there's been a lot of thought and input across the board. And we too often see government's consultations being a joke, being a whitewash. Now, I don't think these are going to be a whitewash. You're dealing with hard vested players here who hold the key to thousands of jobs. So Glencore is not going to stand up for a whitewash or a mere consultation. They want to know that what they're saying is being dealt with. They want to see action. And in the other industries as well. And they don't want to see the average press release from government. We hear it, we're taking into account, we're going to put concrete measures. We don't want to hear you're going to put concrete measures. We want to see what they are. Here's the concrete measures we are taking, and have numbers and dates and people. And that's how businesses work for thousands of years. And that's how effective governments work, be it Singapore, be it China, be it Japan, South Korea. I think our government kind of knows what to do, but it goes against so much of what they've been doing. And because they have too many masters, the South African Communist Party, the unions, international relations, the ANC, internal, unfortunately, our people in government are catering to too many masters. And I think even Jesus said, give Caesar what's his and give God what's his. And that's about it. You can't be giving 4 or 5 different people your priorities here. This is survival of the country and growth of the country. That's simple.
It looks like the market is skeptical about this kicking or rather interpreting it, they'll be kicking the can down the road. Merafi's share price down 3% yesterday. You'd have thought with such good news the day before, it might bounce back up. What are we to read from that?
Look, these short-term moves, they deserve an eyeball glance, but they don't they don't warrant you pulling off the road, turning around, and going back the other way. It could be for something else. And also, the trend is your friend. It's been going down for a while because the trend is our high electricity costs and other high costs have led to closures, have led to loss of markets. And because a lot of our mining companies are now on much narrower margins than they would have been otherwise, it means if metal prices go down or there's a little burp in the market, then lower electricity prices aren't going to save the situation. Yeah, we got to realize it takes a long time to build up a strong industry, and industries dependent on all these infrastructure inputs like electricity, like roadways, like railways, like ports, like bureaucracy, like license, how long does it take to get your license? All that has an input. So you can say electricity is the biggest component. Yeah, then that's where we've got to go first. And government's done that. So we give them credit for that. But these other inputs, they're important as well. Government really has to change their thinking now. Like, they got to realize this ideology, this supposed ideology, it's not working. That it hasn't worked from the time they've implemented it. And that ideology is too amorphous. Each minister seems to have a different version. There's got to be one ideology here. It's to make South Africa the most competitive country in everything they do, whether it's agriculture, mining, tourism. And we got to benchmark everything we do against world standards. And that starts with government. We got to benchmark our government against world standards, world best.
Yeah, it's an interesting debate or philosophical debate that one can have about people, as you said before, they weren't behind the wheel. They'd never been behind the wheel. They went behind the wheel. They had lots of fat to work from and, of course, messed it up. As we know, South Africa in 1994 was 50% of African GDP. Now, I don't know, it's a lot lower than that anyway, a fraction of that. But it does appear as though people who don't know anything, at least if their minds are open and they're prepared to change and to accept the reality, then at least you can go forward. And maybe we're seeing that. But I want to ask you about gold, because you've been a bit skeptical about gold. And the Bank for International Settlements came out this week with a report to say gold is heading for a bubble. Now, you don't get the BIS making these kind of statements easily. This is central bankers. It's the central bank for central bankers, if you like. And they are now waving quite a flag. What do you make of that?
No, I'm glad they are, because people should not be shifting policies that take in a $4,000 gold price to be viable, and to be investing here. Hell, I'm as skeptical of mining companies investing here, which means buying out other mining companies on valuations of $4,000 gold. And yeah, just look at where it's gone. This is the all-time high gold price to the money market index. Now, we know money markets are supposed to keep up with inflation and maybe give you 1% more. And that's so the majority of savings are in money market for the average person, especially for retirees. Now, gold has exceeded the high of the money market that it hit in 1980. And we know that was a bubble because gold had gone from $35 an ounce to $800 an ounce in about 6 years flat. Well, we've now exceeded that relative to the money market. We've only been this high relative to the oil price once in the history of man. Has gold been this high to the oil price? And funny enough, that was only about 12 years ago, and it didn't last. If the average oil and gold, the average price of oil to gold is 19 to 1, let's say 20 to 1. Well, we're now on 70. We're 3.5 times higher than that. And here's something even crazier. I never thought I'd see the day when a 1 ounce silver coin could buy a barrel of oil. So if anything's getting pricey, it's gold followed by silver right behind it. So yeah, it's left behind all of the other things that we normally benchmark it against. The bond index. Now, what about shares? Okay, we can say, oh, the S&P 500 is still way, way higher than the gold price on an historical basis. That is true. We know nothing compounds like the all-share index. And there's no reason to think gold should outperform the all-share index because gold is safe. It's safe and it's secure, like cash, like bonds, and like property. So that's the reason equities grow more, right? They're more volatile, but they're more dynamic. And equities are like the peloton in the Tour de France. So you'll see a couple breakaways. Say that's the gold price. Say that's property. But in the end, the peloton catches them all, right? And if it doesn't catch him, had the race gone on another 5 or 10 kilometers, the peloton would have caught the breakaways. So I don't think it's fair to say that gold has to outperform equities over all time periods. It's a stable asset. It doesn't need to give the same return because it's a secure, almost guaranteed. Yeah, we'll get philosophical, which is not good. But there's warning signs out there that our equity market, especially the S&P 500, it's too heated because it's certain divisions, i.e. the AI division, that's still very unknown, that's driving it up there. Just like the IT division drove it up back in 99, 2000. Well, too much of that wasn't warranted. So when it had a correction, it took 15, 20 years to get back to where it was. So I don't want to wait another 15, 20-year correction when this gold price comes off. But it's just saying, people beware. Mining companies are in gold. They're going to produce it no matter what the gold price is. But for investors, think what you're doing here. And is it speculative money that's bringing it up to this? Is it these Bitcoins and Ethereum that's converting their cash into gold? Is it the Chinese central bank? Is it European central banks? Because the indications are they've all toned down. Maybe they're buying below 4,000, but I don't think they're pushing it here. Yeah, I'm very wary here. There's better, safer assets to be in now than these gold ETFs and gold shares, in my view.
And that doesn't mean that you're predicting an immediate collapse, but you are saying, hang on, when things are expensive, rather go and buy something that's cheap. And
yeah, this is about taking insurance. Advice. This is about hedging your risks, diversifying your risk. That's what I'm saying. I have no idea if gold's coming down this week, but I think it's got to come down a bit. It's too pointy on all the charts. It's too pointy relative to all the other assets that are available to people.
Peter, just to close off with PGMs, on the other hand, we've had they've been depressed for a long time because of the concerns that the whole world was going towards electric vehicles. You mentioned a little earlier in this conversation that it's time for South Africa to reassess and start using the coal that we have to produce the energy, cheap energy that will make us globally competitive on so many fields. Is it a similar story here with PGMs, platinums, that they've been taken down too far by the hype around the zero emission story?
If you're a fundamentalist, you got to be more positive on the PGMs than on gold, Ali. We have a unique competitive edge here. We not only have 80% of the known reserves, 80% of the known resources, but we produce nearly 80% of PGMs. Maybe on the platinum side, we produce 70%, but on rhodium, ruthenium, we're producing 90%. Maybe on palladium, we're producing 50. So yeah, overall on the PGMs, we're the big gorilla. And so we don't need the railroad infrastructure as much as the bulks. We don't need the electricity quite as bad as the aluminum refinery. But we do consume a lot of electricity because our mines are going underground. The mills take a lot of electricity, and the PGM base metal smelters take electricity. So let's maintain that competitive edge. Excuse me. let's further cement it. Let government help us. We've lost so much of our competitive edge on beneficiating chrome and manganese. I think the ferromanganese, it's as good as gone forever here. The chrome, let's preserve what we got and let's aim to build it up a bit. But for heaven's sake, the PGMs. So I am more positive on them than the gold, and it's a smaller market. It's the world is pretty much balanced right now in what it uses for PGMs. The investment side of them is much, much smaller than on gold. So, and those fundamentals mean a lot. It means even if the prices fall in PGMs, we could constrain production for a year or two. That'll have a noticeable impact on the market. Whereas almost nobody can constrain the production of gold and expect it to have a noticeable impact on the market. So lots more fundamentals in platinum's favor. Now, the PGM prices are above their mean. Rhodium is double its mean, and rhodium is still 25% of revenue. Palladium is double its long-term average. It's about 20% of revenue. Platinum, it's only maybe 25% above its long-term average, and it's 35% of revenue, maybe 40. So they're not crazy prices, but it's above the mean. It's almost a standard deviation when you put them all together. But I feel a lot safer with our platinum shares than our gold shares, based on the metal price, not on the industries, but on the metal price.
And maybe Pretoria and Eskom should be looking at this and saying, hang on, we don't want the PGMs to get into the same kind of trouble that the ferromanganese have got into, and the ferrochrome. So let's start giving them a bit of a break as well. Is that what you're arguing for?
Yes. And we've said so long, Alec, you, I, and every economist out there, government doesn't need to do very much to really help our industries here. In fact, if they would just repeal legislation, if they would just not have so much legislation, our industries know what to do. This has got to be one of the easiest jobs in the world, turning around a sick, tired industry that's been constrained by all this massive government intervention and regulation. Our government should have the easiest job on the planet of accelerating their industrial base. That's their Christmas present they can give to us. Less regulation, less policy.
And they don't have to reinvent any wheels either. Peter Major is with Modern Corporate Solutions. I'm Alec Hogg from biznews.com.